Wealth Wednesday with Brent Wilsey, president of Wilsey Asset Management.
Good evening. I'm Brent Wilsey, president of the investment firm Wilsey Asset Management. Well, interest rates are very important because they control a lot of things. Your investments, buying a home, doing a remodel, buying a car, credit cards. It's so important to understand what's going on. Well, I've got some news that may not be good for you, but it's the understanding of what could happen with interest rates. And I do want to, before I jump into that, very important with interest rates is inflation. This morning we had the CPI come out, that's Consumer Price Index, a measurement of inflation, was at 3.4%. That did fall from last month, May, and this is a June reading, did fall from May when it was 3.5%. Some things to try to help you out, make you feel a little bit better. If you like salads and lettuce on your sandwiches and so forth, lettuce was down about 16%. Also too, hotels and motels are down 3%. And I was reading this past week as well that there's a big abundance of chicken coming online from the chicken companies. So you should start seeing sales on chicken, the price of chicken falling. So if you want to have a nice chicken salad, that's probably a good meal going forward, not very expensive. But let's talk about the interest rates, why I'm concerned on them. We have a U.S. debt that is about $40 trillion. That's 120% of the GDP, and that's like your income. That's what GDP is. So 120%, pretty high, especially because right now we're in a good time. We're not in a war. There's not a national emergency. We're now dealing with a high debt in a good time. That is a problem. Also, too, annual deficits are exceeding GDP by 5%. Now, what does that mean? That's a problem as well because it means the debt is growing faster than your income. It's like if you had your income and you're making X dollars, but you're spending more than that, increasing your debt by more than that, you're gonna have a problem. We've got to do something here, and I would love to say the GDP will grow more than that, but it's got to be a growth on GDP. It also has to be some cutting of the debt somehow. More debt is being issued. The Federal Reserve balance sheet, that is something that is a concern. It is now about $6.7 trillion. That's about 21% of GDP. Now, it is better than during the pandemic. During the pandemic, it was like $9 trillion. That was 35% GDP. But when you compare it to the historical times before 2008, it was only 6% of GDP. So what this means is that they used to buy debt that would keep rates low. They need to get rid of that debt on their balance sheet. That means more debt going to the market. That's not a good thing because the more debt comes on, the more that you have to pay a higher interest rate for it. Also too, the pandemic, they were purchasing like treasuries and mortgage-backed securities. These are just things that they did. They're not going to be doing that any longer. So looking at the history of interest rates, this is very important because it helps you understand what is going on. So again, you can make better investment decisions, purchasing decisions. Since 1958, the 10-year treasury was about 1.9% above the inflation rate. And what that means, if inflation is 2%, well, about a 3.9% treasury. And then on top of the 10-year treasury, mortgages were about 1.5 to 2%. So right now, the 10-year treasury is about 4.6%. Mortgages about 6.6, 6.7. I am concerned that the 10-year treasury could go a little bit higher. Again, about 4.6 right now. So these are things you have to watch. And the reason why we're having these problems is that the high government debt, federal balance sheet, the Federal Reserve balance sheet, deficits, issuance of new debt, not just from the government, but from private firms as well. So these are problems that we have, is that there's a lot of supply coming to market that can cause rates to stay high or perhaps even go a little bit higher. I'm Brent Wilsey. Thanks for watching. For more information, go to my website, smartinvesting2000.com.
This has been Wealth Wednesday, sponsored by Wilsey Asset Management.